Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Markets remain flat after giving up their opening gains. The Nifty continues to face resistance at higher levels. Pharma and PSU stocks outperform. Speaking of PSU banks, the index is among the top performers in trade today. All but two constituents of the index are trading with gains. Bharti Airtel remains the top performer on the index for the second straight day. The stock is up almost 12% over the last two sessions. And Glenmark Pharma is up for the third day in a row. The stock breaks above its 50-day moving average and is up close to 30% in just last three sessions. Good afternoon, Neeraj. It's been quite a lackluster start to this fresh week.
Yeah, and you know, bobbing between the red and the green, currently in the red. No alarm bells, but well, it's a flattish move for the Nifty 50, as also for the Nifty Bank, by the way. We've been speaking about how the banks are the big determinant, and the Nifty Bank in today's session is lying absolutely flat. It's just been that kind of a day. You can see throughout the trajectory, hardly any volatility out here. Bring up the heat map and show you what's moving and what's not on the large cap end of the market. With a start wherein there was a lot of green and very little red. Now it's almost even Stevens. Stocks like Yes Bank have corrected, but amongst the notable names, Britannia comes off, HDFC Bank comes off about 1.5% in the session today, so that is putting that pressure. ICICI Bank about 0.5%. Now you know what is exerting the pressure on the Nifty Bank, and then Reliance adding to that pressure on the Nifty. What is doing well? Some gains for Tata Steel, Bharti Airtel up another 3.5%, so fresh 52-week highs for that one. BPCL 3.5%. This whole talk about the divestment and the finance minister saying that by March you will have that going or announced and firmed up, 3.5% higher for that one. And some gains for stocks like JSW Steel and Hindalco. So commodities and metals as a pack has done very well in the session today, at least on the large cap end, Devina. I don't quite know about the mid cap end of the market. There too, likely that the breadth would have been lackluster.
It's a struggle in today's session, even in the mid-cap space, Neeraj. Nothing much is actually happening in order to spur interest back into the broader markets, but it's going to be another stock-specific day. So we're going to start off first with some of the gainers and what's driving those stocks. So it's the healthcare segment that's garnering a lot more attention this morning and this afternoon. Wockhardt for one. The talks of interest and media reports suggesting that Dr. Reddy's, Cipla, even a Hong Kong-based fund interested in some of the units of Wockhardt. Stocks up 11%. Glenmark Pharma on the upgrade, coming in from CLSA, straight from a sell to a buy. Stocks up 20%. That's a big move. And Vodafone Idea yet again is up about 20-odd%. Other movers in trade include the likes of a Corporation Bank. Remember, Corporation Bank, post the SR Steel announcement, got that big fillip. The stock was up in double digits on Friday's session. It had an exposure for about 1,600 odd crores, and the stock in today's session too gains about 13.5%. Dish TV, the entire SL Group stocks are up and active in today's session, including a Z-Learn. So Dish TV is up about 6.5%, with a 10-time spurt increase in volumes as well over the last 20 days average. And Bayer Crop Science, they had their analysts meet. They said the second half is going to be much better, and on the back of that, the stock's doing well. What's not doing well then, you've got Sterling Wilson, yet another day where it's on lower circuit. After hitting lower circuit on Friday's session as well, there was some clarification that came in from the promoters that said that they're not looking at an extension of the deadline, but that's not prompted any kind of a move on the stock. It's still down 20%. Profit taking in Avanti Feeds, Gayatri Projects is the other one which is down, and some volume buzzers, Just Dial, Parag Milk and Century Textile, trading with gains on heavy volumes much higher than the last 20 days average. But what else is active in the futures and options space? Namit is going to highlight that for us. Namit, good afternoon.
Good afternoon, Devina. Thanks for that. While the indices are pretty much flat, the volatility index has jumped today. While we were highlighting how the India VIX had cooled off last week by 5 to 6%, but right now, and it's just not about now, I think throughout the trading session, VIX has been at elevated levels of 16 points, up about 6.5%. So pull up the Nifty as well as the Bank Nifty futures. No major build-up seen for Nifty, at least. For Bank Nifty, which has been adding a lot of open interest right from the time when the series started, right now is added about 8%, and the futures are just trading around those levels of 31,000. In terms of options data, your most active strikes for the day are 11,900 put and the 12,000 call. Well, the right plate will just come up on your screen. What we've observed today is more of call writing which has come into the system. So 11,900 as well as the 12,000 strike both have added significant amount of OI, and that's the change. As you can see, the green bars representing the 11,009 and 12,000 strike are seeing that addition. So the range is 11,800 on the downside. Of course, that psychological mark will continue to remain the resistance. That's 12,000. Stock specific Glenmark, which has crossed 50-day moving average in today's session, is witnessing long positions on the future side. And just want to highlight the deliverable quantity as of now is just about 16 to 17%, and that does not augur well, which tells you that it could be more of a speculative trade because the volumes are high. But definitely on the future side, we are seeing long build up for Glenmark. Bharti Airtel, I want to highlight the options picture. We highlighted on Friday that 400 was the level which was key to cross, and that has been crossed today. So maximum open interest has shifted from 400 call to 420, and the other positive sign is 400 call has seen unwinding in the second half of the session today, and we've seen put writing now coming in at 400 put. Let's see whether 400 now becomes the support of this stock or not. But Siemens is the other one which is down for the fourth straight day, and the futures are indicating there is significant amount of short build up which has come in as the open interest has gone up by about 18%.
Okay, let's begin this show with the market voice. Michael Ingram, who is an independent market strategist, joins us right now on the show with his thoughts. Michael, good having you. Thanks much for joining in. The last few days, a lot of indicators haven't proved to be fruitful. There may have been a golden cross for the EM pack, but the emerging markets have come off. All the bets being placed around possible resolution for trade war isn't quite working out, and we still have the commodities doing well. So where is it that you are finding favor in the current scenario in the emerging market pack?
Yeah, good afternoon. Look, it's a very difficult environment for emerging market investors, isn't it? Whilst the credit space is looking quite supportive, we've had credit spreads on emerging market debt driven down to now to multi-year lows, and obviously the Fed is very much instrumental in that market move. We've had relatively cheap emerging market currencies, and in recent months we've had a little bit of a help from the carry environment. But I think the real issue as far as emerging markets is concerned is simply growth. Yes, we can continue to see, by and large, disappointing soft numbers at the macro level. And in terms of the earnings per share outlook, whilst there have been some markets such as Russia, South Africa, where I think the EPS numbers have actually come up a little bit this year and into next. I mean, some other markets, South Korea, for instance, had an absolutely awful time. In the EPS forecast down something like 40%, and clearly some stocks like Samsung, in the at the epicenter of that. So I think the outlook is broadly neutral overall. I think you have to be sort of quite market specific. I still think that the external environment might come back into focus, and as you mentioned, you do have the spectre of geopolitical risk, which I think is helping to hold emerging markets back as a whole. It is seen as a marginal risk asset by global investors. The situation in Hong Kong at the moment appears to be deteriorating, and as you say, it remains unclear as to where we're going in terms of US-China trade. There were some very positive noises over the weekend in terms of a conference call between Liu He and Steve Mnuchin, but we've been there before more than once, so I can understand why the market's quite cautious at the moment. And I think in the absence of any break in that negative momentum on growth, in the absence of any substantial developments on the US-China trade front, I think emerging markets actually might continue to struggle.
In light of that, then, Michael, do you see money that's been lying with the foreign institutional investors that probably could have been allocated to emerging markets now going back to US equities?
Well, I think that US equities have remained, reasonably well bid. Actually, I mean, I was remarking just before I came onto this show that we're now into this outlook for 2020 sort of stage of the year, and 12 months ago everybody was saying the US was going to underperform, and certainly within developed markets you should be looking at European cyclicals. That's proven to be completely, I think, the wrong call. Although I guess we've still got a few weeks of the year left, but I'm somewhat skeptical. You still see the tech sector in the US, as broadly defined, still very well bid. You still see the dollar very well supported. I think the latest CFTC data suggests that, you know, if anything, speculators or non-commercial positions are rebuilding long of the dollar. So I think whilst there's a sense there that there's value in Europe, there's value in emerging markets, I think that, you know, as I say, given the very profound geopolitical issues that are out there, given the very, very striking lack of growth momentum, EPS momentum outside of the US, I think that's helping to hold allocators back. Now, of course, we may well see a bit of resquaring of positions as we get towards the end of the year. There will be an incentive for many of these asset allocators, fund managers, to lock these profits in. And of course, we need to be, you know, aware of what happened in December of last year in terms of overall market performance. I think if you're ahead of the game, maybe that's what you do ahead of liquidity completely drying up in a month or so's time. There is the firepower there, but what I'm saying is I think the positioning would help emerging markets. I think the fundamentals aren't quite there yet.
Michael, within the emerging market basket, back home for India, macros are not looking that encouraging, especially the recent data points, be it in the form of IP or CPI numbers, were not that great. And of course, we'll be getting the GDP numbers for the September quarter by the end of this month. And economists have already started, to scale down the estimates. Moody has changed its outlook on India. But some divergent views seen when it comes to the stock markets. We've not corrected too much. In fact, we've seen some bit of recovery in the last 1 month or so. So within that EM basket, keeping Indian macros, which are looking like they may have bottomed out, but that remains to be seen. The little flows which is coming to EM, where does India stand right now? Will it continue to receive, or there'll be more of outflows?
Well, I think, you know, a big picture, as I say, remains broadly neutral for emerging markets, and as one of the largest global emerging markets, that's neutral for India. Of course, the way that many emerging market investors play this, particularly if they're Asia Pacific centric, is they make a decision about whether they're going to be over or underweight China, and India tends to be on the flip side of that. And in that respect, of course, it's difficult at the moment to be particularly bullish on China, given the lack of visibility that I've already mentioned. And so in a way, India, is a beneficiary of that kind of environment. You are right, however, that we have seen some downgrades to India's growth forecasts. I believe if you look since April, since the start of the financial year, I think EPS estimates are down about 10% in 6.5 months or so. There is a negative dynamic. I'd have to say, relative to perhaps the rest of emerging markets, it's certainly no worse than the rest of GEMS, broad brush. But I mean, I think that one of the things that is missing in the minds of many investors looking to put more money into to India is actually the reform agenda seems to be stumbling. I think that some of the recent, should we say, political moves in India don't really help sentiment. They've already been rudely reminded how this can turn against them in what's going on in China, Hong Kong. And, so I think that's keeping a bit of money on the sidelines, quite frankly. And another thing, by the way, that you mentioned was inflation. I mean, I think you do have this disconnect between headline and core CPI at the moment, them going in different directions. So, of course, there is a lot of speculation as to what the RBI's next move may be, with, I think, opinions quite evenly split between rates on hold and on a cut. But, of course, a cut in interest rates, the capacity for emerging markets generally to cut interest rates, I think, is one of the things that might well be a support, though, of course, there is a bit of a backwash in terms of local currency performance.
Right. Great to get your thoughts, Michael. Thank you so very much for spending some time with us this afternoon here on BloombergQuint.
My pleasure.
All right, moving back to the markets and back to earnings then. It was an operationally steady quarter for Mold-Tek Packaging. Profits rose over 40%, while margins too saw an expansion compared to last year. Let's discuss the quarter gone by with Jay Lakshmana Rao. He's CMD at the company. Mr. Rao, thanks very much for taking out the time. So it wasn't a bad quarter. In fact, a steady quarter at Mold-Tek Packaging. You've seen an overall expansion with regards to your volume growth, which grew 21% on a year-on-year basis, 13.8% jump in sales. EBITDA saw an increment as well as an expansion in the EBITDA margins on the back of softer raw material prices. Could you tell us now what is it that we can look forward to come the second half of the year?
Thanks to the new plants at Vizag and Mysore and our fast growing in food and FMCG sectors, where we registered more than 40% growth over the first half, we could maintain a good momentum. But for the economic slowdown, it would have been more than 20% volume growth we envisaged. And going forward, the economy is still slow. The sectors are yet to pick up speed, but we are confident we'll be looking at a 15 to 20% volume growth in the second half also. So the full year, we would be somewhere around 16 to 18% volume growth and probably around 35% increase in the bottom line.
Okay, so this time's volume growth can be attributed largely to the volume growth in paints and the FMCG segments. Lubricant segments weighed down a bit, so that didn't contribute much. Going forward, do you expect a better pickup in all of these segments individually?
I still feel lubricants might be just there what they were in the last 2 quarters. Paint might pick up because there was continued downpours and rains all over the country, dampening the consumption of paint, which might pick up from October, November onwards. So hopefully paint sector should come back to normal growth in the second half. But lubricants might be just subdued. But our food and FMCG, we are looking at more than 40%, probably a 50% growth in the H2, which should contribute handsomely to the overall growth.
And FMCG segment value contribution also increased 40% to about 26 crores in this quarter. Is that the pace that you're going to be maintaining through the upcoming quarter? So this was just a one-off that we saw where FMCG contributed, so largely.
No, even if you notice last year, full year, our growth in FMCG food is 40%, almost 39.9%. So we are continuing the same speed, and going forward, we may see some acceleration, in fact, because we are adding many more new clients in various food segments, including edible oil, starting with ghee and then ice creams. And now we are in touch with aqua, some chemicals and minerals and fine fertilizers. So all these new applications for our tin wall products that are meant for food and FMCG are growing faster than 40%. So probably they will be main contributors in the coming quarters.
Mr. Rao, you've time and again stated that FMCG will continue to contribute. Of course, that's also coming on a low base. Last quarter, FMCG as a percentage of your total volume was about 18%. What sort of increase can one expect now on an annual basis towards your top line from the FMCG space?
Yeah, last year it was a total of 21% for the full sales. And probably this year we'll be looking at somewhere around 24 to 25%. And actually this would have been much higher, but for the increased sales come from the paint sector, that is our Vizag and Mysore plants. Had they not come, the percentage would have looked up beyond 30%. But because there is a growth also in the paint segment from our new plants, the numbers look little less contributory. But going forward, these numbers will certainly cross 30 to 35% in the next couple of years.
And your new plants, you said in Vizag and Mysuru, they're operating at 50%. In the second half, can we expect that percentage to go up?
It should, because all started sometime in March, April. So first couple of months, actually, the production was much less than 20-25%. Only last 2-3 months, it picked up close to 50%. And I guess it should be at least 70% in the next 6 months.
Okay, one last question then. Raw material prices were soft for you in the quarter gone by. Do we see that trend continuing? Because that also provided fillip to your margins?
Yes, actually, there's a much bigger drop in the last 2 months in the raw material prices. Of course, we pass it on to the clients in the following months or quarters, but this quarter might benefit from the fall in price.
Okay, Mr. Rao, we leave it at that note. Thanks a lot for joining us and all the best to you for this second half as well. But on that note, let's go across to the Prime Minister who is addressing the Rajya Sabha right now.
वे हमारी विचार यात्रा का प्रतिबिंब है, भारत की विकास यात्रा का प्रतिबिंब है और वैश्विक परिवेश में भारत किस प्रकार से नई नई बातों को लीड करने का सामर्थ्य रखता है उसका उसमें प्रतिबिंब है और ये काम इस सदन से हुआ है, इसलिए सदन अपने आप में गौरव अनुभव करता है। मेरे लिए सौभाग्य का विषय है कि आज इस महत्वपूर्ण अवसर का साक्षी बनने का और इसमें शरीक होने का मुझे अवसर मिला है। ये साफ कह सकते हैं हम कि कभी चर्चा चल रही थी संविधान निर्माताओं के बीच में कि सदन एक हो या दो हो, लेकिन अनुभव कहता है कि संविधान निर्माताओं ने जो व्यवस्था दी वो कितनी उपयुक्त रही है और कितना बढ़िया कंट्रीब्यूशन किया है। अगर निचला सदन जमीन से जुड़ा हुआ है तो ऊपला सदन दूर तक देख सकता है और इस प्रकार से भारत की विकास यात्रा में निचले सदन से जमीन से जुड़ी हुई तत्कालीन चीजों का अगर प्रतिबिंब व्यक्त होता है तो यहाँ बैठे हुए महानुभावों से, क्योंकि ऊपर है, ऊपर वाला जरा दूर का देख सकता है, तो दूर की दृष्टि का भी अनुभव इन दोनों का कॉम्बिनेशन इन हमारे दोनों सदनों से हमको देखने को मिलता है। इस सदन ने कई ऐतिहासिक पल देखे हैं, इतिहास बनाया भी है और बनते हुए इतिहास को देखा भी है और जरूरत पड़ने पर उस इतिहास को मोड़ने में भी इस सदन ने बहुत बड़ी सफलता पाई है। उसी प्रकार से इस देश के गणमान्य दिग्गज महापुरुषों ने इस सदन का नेतृत्व किया है, इस सदन में सहभागिता की है और इसके कारण हमारे देश की इस विकास यात्रा को और आज़ादी के बाद के बहुत सी चीजें गढ़नी थी। अब तो 50-60 साल के बाद बहुत सी चीजें शेप ले लिया है, लेकिन वो शुरुआत काल में फियर ऑफ अननोन से हमें गुजरना पड़ता था उस समय।
All right, that was the Prime Minister speaking in the Rajya Sabha. But moving on, SpiceJet is confident that the Boeing 737 MAX aircraft will be back in the air in 2020. The Budget Airlines Chairman and Managing Director Ajay Singh, in fact, doesn't rule out placing orders for more Boeing 737 MAX aircraft at the Dubai Aero Show. Speaking to Bloomberg Television, he says SpiceJet will continue to focus on India's growing aviation market and new bases set up across the globe will be to capture that very market. Listen in.
I believe that the issues that the industry faces today are actually opportunities for us to reset our model, make sure that we bring our costs down, and find growth.
Some of the people I've been speaking to here in the last few hours, they made the point that we could get a surprise from SpiceJet with an additional order for some of the 737 MAXs. Is that realistic? Is that really in the cards?
Well, that's still under discussion, but we will certainly look to see what we can do, because we have a requirement going for several years, and growth with just 3% of India flying today, there is going to be great growth in the next few years and decades, and therefore we think that this would be an opportunity for us to provide for that growth.
Give me a sense of what the conversations with Boeing have been like about the recertification of the 737 MAX. How soon can they get these planes back into the sky?
I think what Boeing has said to us is that the technical fix is in place, and it's a certification process that they are going through at this time. Of course, with the accidents that have happened, FAA is being extremely cautious, and as they should be. But the expectation appears to be that Boeing should receive certification by the end of this year.
So by the end of the year, there could be some progress. If there is a disparity between regulators, so let's go with an assumption that the FAA gives a green light, but some of the Asian regulators say, wait, hold on, still a red flag here. Do you fly or you don't fly?
Well, obviously, we can only fly when the Indian regulator certifies us to fly. So we are hoping that the Indian regulator will work closely with FAA. Of course, regulators will have their own time frames, but remember that FAA is actually an extremely reliable regulator, and we expect that other regulators will follow pretty quickly after the FAA. The Europeans might take a few weeks, the Chinese and the Indians might, be somewhere in between, but it's a question of time. It could be a few weeks or a little bit more. But we expect that certainly in the first quarter of next year, most regulators should have certified this and the aircraft should be flying.
The other component of your growth strategy I want to talk about is your push into the Middle East and you looking to set up a hub here. How much progress have you made, and how do you put up a fight against an increasingly consolidated United Arab Emirates opposition?
Our focus is largely the India market. We have 11 flights from India into Dubai every single day. And we are looking to consolidate that by putting some flights into our new hub, which is Ras Al Khaimah. We will also have flights going from Ras Al Khaimah back to India. And we will try and see if we can get some of our passengers to get into Ras Al Khaimah and then use the AOC that we are getting in Ras Al Khaimah, the airline that we are setting up there, to do short-haul trips into Eastern Europe.
All right, that was SpiceJet's management there, Mr. Ajay Singh, on the sidelines of the Dubai Air Show. SpiceJet, though, the stock right now is down about 0.25%, 106 odd rupees on the stock price right now. Coming back to the markets, absolutely flat, now dipped into the red for the index, but just a smidge under 11,900 for the Nifty 50, with the Bank Nifty hovering around 31,000. Moving on, listed life insurance firms have been commanding a premium for some time now. That, in turn, has started raising questions on the sustainability of such high premiums. Comparisons have also been drawn with asset management companies. Haitong equity researchers and analysts have now come out with a report arguing that it would be wrong to compare life insurance companies with asset management funds. Shefali Malik, she has read that report and she sums up both the arguments for us. Shefali.
Well, to start with, why this comparison is happening in the first place between life insurance companies and the AMC business. So they are saying that given the fact that life insurance is still viewed largely as a savings product in India, and the similarities between the ULIP and the AMC businesses, so because of these reasons, this question has perplexed the investors, that why life insurance companies are commanding a better valuation than the AMCs. So valuations in terms of market cap as a percentage of AUMs, even for a player like ICICI Prudential, which has written a significant amount of ULIP business, and for them, the market cap as a percentage of FY19 AUM is about 47% compared to 22% for HDFC AMC and about 9% for RNAM. And even for players like HDFC Life and SBI Life, it appears exorbitantly high at this point in time at 93% and 70% respectively. So Haitong is saying, according to their observations, according to their analysis, it's unfair to compare the two businesses from a shareholder's perspective. For the biggest reason for that is, in the life insurance business, there's a lot more than just a ULIPs business. So in life insurance, you have two elements primarily: protection business and the savings business. And even within the savings business, you have the ULIPs business, participating and non-participating business. And even within that ULIPs business, you have to strip off the mortality charges. So what is left is the only thing that is comparable to that of the AMC business. So that is their main point that they're putting across in their particular report, that the only comparable thing is the ULIP savings business of the life insurance companies, to that of the AMC business. And now, after that, their observations are that over the last 5 years, revenue charges as a percentage of AUMs for the ULIP business has fallen as the companies have struggled to make the products more attractive. And also the ULIP companies, the ULIP focused life insurance companies have not been as successful in lowering the charges taken by the distributors, whereas on the other hand, the AMC businesses have effectively passed on the TER cut. So going forward, so they think that the ROEs for the ULIP savings business have corrected not going forward, basically in the last couple of quarters. The ROEs for ULIP savings have corrected, especially for ICICI Pru and SBI Life, whereas that for the AMC businesses is expected to go up sharply given the minimum capital requirements. So they're citing one example, that of ICICI Pru, that if you just take that ULIP savings element, it stands, the valuation stands, it's just about 11% of the total valuations that Haitong is ascribing to ICICI Pru. So small part of the total valuations, and that 11% lags that of the pure play AMC companies. So that's the analysis being put out by Haitong, that this comparison is actually not a fair one from the shareholders' perspective.
Right, Shefali, thanks very much for that. So, while we've been, constantly monitoring both these pockets and the kind of premium surges that we've seen in terms of what people are paying for most of these companies, also on the back of the fact that, you have, it's a niche segment, you don't have too many players in these segments, but really, to monitor and to match them on a like-to-like basis may not be the right approach. But let's also bring in our market experts on the show then. Hemant Kapadia of KR Choksi is joining us right now on the show. Along with him, Sameer Kalra of Target Investing is also there with us in the studios. Hemant, I'm going to start off with you first since we're looking at the index levels. 11,900, struggling around that marker. 11,800, how important a support level is that right now?
Quite, Devina, but it's almost boring. It's almost 2 weeks. We don't want to come to 11,700. We don't want to take out 12,1. So every time it threatens to go down, it hangs on. Every time it threatens to go up, it comes off. So I think Nifty, frankly speaking, is a no trade zone. 11,800 on the downside, 12,1 on the upside, and it will continue to do that. And to prevent it from sinking, the bank Nifty is doing something. So extremely.
Is it a calm before the storm?
I think so. The lull can't remain. It's going to remain like this for too long. Thing is, we're sitting on top of a 1,000-point rise. If you look at the whole move, it's 1,600 point rise. Are we not going to correct it by at least 300-400 points? I mean, we are defying laws of gravity, but difficult. It's getting narrower and narrower. Mid caps are performing. AD line is doing well, but I still feel that if we correct it once, it would make the market that much more healthy.
Would you trade it?
I'll sell the 12.2 and 11.5 strangle. That's it, nothing else.
I mean, there's no trigger per se with regard to either for domestic or global. VIX has been up 6% throughout the day. Any observations there?
Well, frankly speaking, like you said, if the VIX is up like it is at 15.93, we should come off a bit. And I don't know if technicals applies to VIX, but it is showing some signs of strength, and that is the case. Then 11.7, 11.6 finally comes, but we don't even break 11.8. So we've seen these swings from one side or the other, but I still feel market is a bit heavy. If 31,200 is taken out by the bank Nifty, and an unlikely up move comes in. Otherwise, if the VIX goes up some more now in the next couple of days, I don't think the markets will sustain over here without at least giving a semblance of a decline.
Okay, let's talk about your stock bets then for the afternoon. Why are you buying Z?
Okay, Z looks good. We are in a, I think it looks like a pennant. So positive on the stock. At buy at 293, stop plus 285, target 309. Looks great. We've been consolidating for 10 trading sessions. Doesn't look like breaking 280. So that looks good. And the second stock is Navneet is Titan. It's actually a contra call because it's not been doing much, oversold. I think there could be a bounce back. So buy at 1160, stop loss 1150 to target 1176.
Sameer, what have you gauged from this relatively quiet period for the index?
I think if you see sector-wise, you have seen some kind of consolidation or correction in consumer names. So I think the high valuation game is going to change up. And now there will be more of money shifting to, let's say, capex-driven names. So maybe capital goods, maybe a name like Cummins, who has seen a downfall in a long time now. L&T is there. Siemens, right now
L&T is also stagnated.
Yeah, but that's what I'm saying. So there can be some movement. See, if you're planning an investment zone or investment side is coming in next 3 to 4 years, these are the major names which cover the whole coverage. And even in the real estate end of it, if the projects and everything keeps on moving, which on the ground now, whatever I get the feedback, construction has picked up to a certain extent. So L&T really helps out in the real estate sector, if you see especially Bombay and Delhi. So I think over there L&T becomes a value pick right now rather than the growth pick. So I think capital goods will be a better play for next 2 years right now.
Since you mentioned property, I think Pirojsha Godrej was talking about pricing of property, and he said up until next year, there's not going to be much of change in pricing. In light of that, then do you feel that some of these companies which have seen this big run-up have been overpriced?
So I think Godrej Properties, Shobha, all the south-driven have been a little overpriced due to the performance they have given. But I think next 2 to 3 quarters won't be that high as everyone expects it to be. There's one reason, because they had been selling very quickly and the inventories on their balance sheets were low. Now those inventories are piling up for them. So that region is hitting it up. But if you see DLF, Oberoi, the inventories were already on the balance sheets. Now they are tapering off. So there are different reactions to different companies. But I think if you pick so let's say DLF or Oberoi right now, I think you'll have a better next 1 year rather than comparing to others.
Okay, then we look at what has happened to some of the more obvious movers in the last 2 days. Frankly, it's telcos that come up all through and through. That's that pocket which has done remarkably well. If you both, let's first talk about fundamentally, Samir. If you were brave enough to go out and buy a Bharti, I think you'd be really brave if you were bought and bought a Vodafone. But let's assume you went out and bought Bharti Friday morning. It's been a very strong, sharp run up. Would you take some chips off the table, even though you invested for the long haul?
I think I'll take off all the chips.
All the chips?
Because see, the only point is 2 things are clear now. One, the government will provide some kind of relief. They are factoring in. What kind of relief? No one knows. It has been communicated in a very vague way. And right now, if you see the valuations from, let's say, Friday morning till today, has spiked up even further, which according to me was already spiked up. Because you're in the industry and you're in a situation where you need to raise that amount of cash. It's not that cash doesn't need to be raised. And you have 5G coming up. So it's a continuous capex driven industry. Now wherever your cash flows go for a mismatch, it's not easy to recover from it, whatever the relief comes through, whether it's voice data regulation or any kind of regulations. So I think it's a good place to get out of Bharti, especially even if I were, let's say 6 months back invested. Not Friday morning, but 6 months back. Because this is like a second chance to get out when you know the issues are still there and nothing has changed from the ground.
Do you agree, Amy?
Yes, I think...
You don't have to.
No,
you can differ.
No, I differ in a way that I would buy an overpriced iPhone than buying Bharti.
Okay. Okay, so you got both technical and fundamental view. Probably take money off the table as Bharti Airtel touches 52-week high today. Though nothing's going right with the industry, but the stock, at least for this year, may have given you some returns. I think it's up about 40%. Vis-a-vis last 5 years, it may not have done anything.
Which is actually the reason why I want to ask him, why wouldn't you touch a Bharti when it's at a 52-week high?
I need to throw a technical point there as well. 400 was the strike where maximum open interest was. That was the resistance which was seen by traders on Friday. It crossed that mark. Now there is unwinding at that strike. Don't you think the base is moving higher for the stock?
I totally agree. But like you said, there was a lot of OI there, Navneet. So this spike that we have seen is also because of short covering. So once that short covering fizzles out, I think reality will sink in. Technically speaking, it doesn't look bad. Higher tops, higher bottoms. We've done higher tops, higher bottoms on the monthly charts, monthly MACD buy, weekly MACD buy, above long-term moving averages. But frankly speaking, airlines and telcos, I mean, 25 years and counting. At least I haven't been able to make any money.
But
so
even if you were to put that 1 lakh rupees of an iPhone in Bhartiya, just a month back, it'd be that much more richer, and the iPhone would have appreciated in its value.
Well, yes, but iPhone 1 has some resale value too. I can pass it on to my kids, so it'll be
You would have
used for
sold
the
it at a higher price right now.
Going in very personal, right? But yeah, no, I mean, Devina's point is well
Yeah.
taken, right? The charts showing so good, why is it that you are taking? Is it looking topish?
No, frankly speaking, if the stock moves from 350 to 420 in 3 trading sessions, I mean, however good it may be, sustainability without a correction, like Navneet said, it's great, everything is hunky-dory, but the spike is because of the short covering from that 400 open interest.
Sure.
If it comes back to 390, 400, then it makes yeah.
Okay. That's Bharti Airtel. 6 months, in fact, the stock moved up about 25%. So.
It's not that bad. As we discussed in the morning, it doesn't seem like a year wherein the telecom space and Bharti is being bruised.
Fundamentally for
Precisely.
the industry as a
Yeah.
whole, but on just the price point basis at a 52-week high for Bharti Airtel, I mean, not taking away from that as well.
It's just done remarkably well. You know what's not done well today, guys? Second day on a trot is Sterling Wilson. And we put out that story on Friday. That stock was down 20%. Today they gave some, or rather over the weekend they gave some clarifications, and despite that, the stock is still down 20% in trade. Now, Samir, what's your view here?
See, very frankly, I don't like renewable as an industry.
But these are technical factors why this stock has come off, right?
Yeah, but the only point is the cash flows and the mismatch of cash flows again become an issue for them. When the PPAs which you've signed and that doesn't get picked up or the offtake reduces, then your cash flow also changes. Your receivables are already increasing quarter by quarter. So I think the stress of cash flow really comes into the picture. So maybe the justification has come and there is a certain respite, but I think next couple of quarters will be even further issue-led as compared to previous.
I mean, they would have gone debt-free if the promoters would have paid back, but that's something that's probably keeping the markets a bit jittery. Repayment hasn't come despite them saying that they're going to repay.
See, the comfort of going debt-free is only when your continuous cash flow is there.
Yeah.
And I think if they're not going right now, they don't see that cash flow turning up very regularly. So going debt-free for a day and then another quarter coming back into the debt line, I think that becomes a very difficult task for a management.
Okay, while we speak, both Nifty and Bank Nifty are in green, so we've recovered at least from the lower levels of the day. And on that note, let's bring in Ajit Mishra of Religare Broking to get more technical views on the markets. Hi Ajit, good afternoon. Recovery seen from lower levels. Are you taking any fresh bet on the indices?
Good afternoon, Navneet. So, yes, see, what we are seeing right now, which I feel is that it's a time-wise correction which markets are currently undergoing, because we've hardly seen any decline from the index from the last couple of weeks. So we are just, hovering around the top of the end. Thanks to Bank Nifty. So we feel this bias will continue, considering that we feel that Bank Nifty still have potential to test 31,600 levels in days or weeks to come. So considering that, yes, 11,850 is a level where one can go long in Nifty, and 11,750 should be a stop loss, and close around 12,000, 12,100, which is the upper band of this range, should be a target area.
Okay, your individual stock bets then for the afternoon?
EFC, after a vertical rise, formed a pause or formed a pattern. Flag pattern, so which breached year today with the decent rise in volumes and up by around 6 to 7% today. So we believe this momentum will carry. So 11,112, this should be the stop loss, and close around 128, that should be a target area. But at the same time, since we are seeing the broader range is still holding for the index, IT looks slightly weak to us. So Wipro one can go short in. Considering that we are maintaining long and short approach in these stocks. So 254 should be a stop loss, and close around 242, that should be a target area.
Okay, just want to pull up Glenmark also to see how that stock has moved. And remember, this was one of our headline stocks as well in the last two trading sessions. The stock has been up more than 30%, trading above its 50-day moving average as well. 364 on the counter. It's that upgrade that has come in on the back of a really good set of numbers for quarter two. CLSA has, upgraded it from a sell straight to a buy. Last 1 month, the stock's been up about 21%. How much more headroom left here, you mean?
Like a pullback, Devina. We are heading towards 390 and 400, but we are retracing the fall from 660 to 270. So essentially, we're in a pullback, and the pullback is not yet over. I'm not sure if it will continue in the same vein, but yes, definitely headroom left, and we are already at 6.25 crores volume. This is gross, not delivery marking for this month. I think the highest volume in Glenmark's history on NSE in 1 month was around 7 CR, and we are still on 18th of November. So I think we are on course to post the highest ever volume in the history of Glenmark, and that too from its lows. So I believe stronger hands are bought. Fresh buy, I'm not sure, but I would wait till 394 410. That's definitely on the horizon.
What did you make out of Glenmark's numbers? They did well across the board, 15% QOQ growth in the US. So did India do well? And the management commentary was not all that bad.
So I think generic prices are bottoming out, and that's in general for the whole pharma industry in US especially. So that is bottoming out, and Glenmark has benefited of certain products out of there. But if you see the balance sheet has deteriorated further on the capex and on the working capital side, both ways. So I feel this kind of a bounce helps me to gauge a exit for a long-term investor, because right now the balance sheets are not improving for certain pharma companies, and they're facing a lot of US FDA issues. So it's better to get out on these bounces for a long-term investor rather than invest up right now.
Okay. But which pharma company, therefore, is doing well? I mean, there are a clutch of names. So balance sheet for Glenmark may not be improving, but a clutch of others have done well. Yeah. Ipca Labs, 52-week highs. Abbott India, 52-week highs. So there are some which are doing well.
So if you see pharma MNC companies, their balance sheets are clean. So all, whether it's GSK, whether it's Abbott, whether it's Pfizer, all these companies are into a cleaner picture. If you see Indian domestic, FDC is a company which is a smaller company, but the balance sheet is clean now.
FDC.
Yeah. And if you see larger players,
but you like it?
Yeah.
Okay.
I'm talking about the liking, the ones I like.
Okay.
And if you see the larger names, I'll rather stick to Sun Pharma right now, because the larger balance sheets are still not improved quarterly and half yearly. So I really don't want to push in on the base of P&L. Sure. I want to wait for a balance sheet improvement and then kick it.
Okay. That's pharma space for you, and Nifty Pharma Index is, by the way, one of your top sectoral gainers. You've also got the likes of Wockhardt and Cadila, which has gone up in trade today. Besides that sector, I think the Nifty Metals Index too has gone up, and that's seeing gains of about nearly 1.6%, and most of the constituents there are sitting with gains, be it Hindalco, JSW Steel or Tata Steel. Of course, there's no specific India-specific news which is coming for the metal space, but some optimism around the trade war, and also Chinese central bank infusing more liquidity by cutting 7-day reverse repo rate to 2.5%, which came this morning. Sameer, now looking at the numbers, especially for the steel players, you've got a new entrant in the form of ArcelorMittal, who's been trying to make foray into Indian shores and finally successful now. What does that mean for the incumbents? And of course, the steel players have not done well globally. Is this the right time for ArcelorMittal to enter into India?
So I think if you see on an absolute basis, I think anytime you enter India from here to next, let's say 20 years, if you're going towards that 10 trillion economy, it's always better to enter at a, at a larger capacity. And they would have really taken at least 3 to 4 years to complete that capacity on their own. And for others, I think this means that the competition has increased. So for them to push through the products so easily, which they were able to do when SR Steel got off, I think now it becomes difficult for them, because Arcelor comes with a bigger pocket to help out distributors as well. And I think right now the distributor level is facing some kind of a pressure. So pricing has helped to help out certain stress over there. But I think right now it's very early to call the bottom in the metal companies. And even if I rather stick to Hindustan Zinc, because over there the quality of product and the usage of the product is still on a higher volume growth, rather than going with steel, which is right now globally almost in the dust.
Let's talk a little bit more about what Shefali just highlighted a few moments ago, which is the insurance companies, as well as the comparison that some of these insurance companies are being made to AMCs, and how does one actually value them and the kind of premiums that some of them are attracting right now. How would you diversify if you have to take a look and take a play on either insurance right now? Both are heavily owned right now, but what according to you has that edge?
So I think if you want to pick either of, I think then insurance will be a better pick, because see, as compared to whatever the history has been, insurance has been a more easily sellable product, and still has a higher margins for the distributor who's a middleman, less regulations for the distributor who's selling it. So I think insurance becomes much more sellable and much more profitable product for the company. So I rather stick to insurance sector. Now within the insurance sector, I'll stick to life insurance part rather than the general, because I think life is able, now if you see in life what is happening, the tier 1, tier 2 are paying for tier 3 and tier 4. So now the metros pay a higher premium, and the same amount of policy, you pay lesser premium if you're in a tier 3, tier 4 city. So that is a very good way for a company to subsidize for the higher growth. And that makes it much more profitable on the even basis. So I think I rather stick out with, let's say, HDFC Life and SBI Life over there.
Okay, just one last question before we let you go. And tomorrow there's the IPO meet for Catholic Syrian Bank. Now, in light of that, does one look at this particular institution to invest money in, or on a like-to-like basis, then a federal bank gains more traction because that stock has also come up from its highs? Yeah. And from a business standpoint, what holds more water?
So I think from my judgment of whatever I've seen, I think federal bank takes a lead right now, because one thing that you have seen, a couple of performances during the floods and everything, and the book is much more sticky for them. If you see Catholic, the book, the client ratio and the top client ratios are a little different, and they vary yearly. So there's a 2 to 3% kind of a movement in top 10 clients within 1 year. So I think over there, federal bank takes an edge from my side. But if I have to pick anyone in the private sector, I think IDFC First Bank has fundamentally, from my side, bottomed out. So I rather look at that compared to any other bank right now.
Okay. Samir, we'll let you go on that note. Thank you so very much for joining us this afternoon. Well, moving on, Bank Julius Baer's Mark Matthews doesn't expect a major move up in global markets as US-China trade talks show some signs of progress. Speaking to BloombergQuint, Matthews said that the corporate tax cuts in India, while a positive for companies, won't lead to a sustainable re-rating of India. Listen.
Well, the trade talks do appear like they are finally going to go somewhere. So we had comments from the Chinese over the weekend through their state media, and we also had comments on Thursday and Friday from the Americans, specifically the Commerce Secretary and the White House Economic Advisor. But what I would say is I don't expect the markets to take a major move up on the back of this, simply because the deal is being spread out in phases, probably 3. And the phase that we're looking at now, obviously being the first one, phase 1, is the simplest one. Probably what you will see is the U.S. Will agree to not go ahead and increase the tariffs that had been scheduled for December 15. There's also a probability they could take back some of the existing tariffs. That's what the Chinese have been asking for. But the much more important stuff needs to come up in phase 2, perhaps even a phase 3. The real nitty-gritty of how they're going to rectify the trade imbalance and China will respect intellectual property protocols, etc. Those are more difficult to achieve, and I think the market is already looking toward that phase 2. So, I mean, it's good news, but with the Shanghai market and the S&P both up about 25% year to date, I don't think that, let's put it this way, they didn't collapse because people expected no deal. Therefore, I really don't see them going much higher on the back of it.
Okay. While there is some amount of optimism, the key question is that the full impact of the trade talk, the trade issues have not yet played out with regards to the numbers that we are seeing coming out of China. If the first phase doesn't go through, for whatever reason it might be, though there is optimism that it will go through, if it doesn't, then the full impact of that will happen in the next year. I think more than 20% is what some analysts in the street have been talking about, which could be an impact for China. How does that play out in the negative situation then?
I really don't think the Chinese economy is in bad shape. It's true the October data was, on the whole, softer than the September data, but only marginally. None of the numbers were very, very weak. And so I think the government will continue to kind of massage at the sidelines the economy. For example, they did a reserve requirement rate cut today, and they injected some money into the financial system through the medium-term lending facility that they have. But nothing really big. I don't think it needs anything big. I think, now they're indicating that next year's growth will be below 6%. I think 5.8 is the number that they've suggested. I also feel that we shouldn't really panic that much. I mean, for a $14 trillion economy to be growing at 5.8% is still very, very big.
Yeah, well, it is. Mark, if I shift the focus a bit back towards the domestic moves that have happened in India. Now, a lot of people, I would want you to weigh in on this. A lot of people correlate the Indian tax cut to what Donald Trump did or what the US did a year back, and the resultant outperformance in the US markets, and then try and say that India could probably have a similar thing. And there is no way to either affirm that or contradict that because there will be a number of factors which went behind US and not just the tax cuts as well. How do you weigh in the market moving impact of the corporate tax cut rate in India from a next 3-quarter perspective?
I think it will be broadly a positive. Right now, the numbers are all over the place because different companies are taking advantage of the tax cut to do different things. But I think it will add a few percentage points onto EPS growth in the coming quarters. And as much as it does increase the fiscal deficit, I would look at it as a positive. Because the major thing, to come back to what I said earlier, that I think is holding India back is the private sector is simply not investing, and that has a whole follow-through effect on the rest of the economy. And ultimately, the reason for this, I think, is the squeeze in the credit system, and the fact that because the big state banks are still beleaguered with a lot of non-performing assets, and now we've had this non-bank financial system blow up. There isn't enough credit. So in the absence of that, I think it is good to provide some relief to the corporate sector through tax cuts. But is it really going to lead to a sustainable re-rating of India? No, I think for that to happen, you have to have the economy come back, not just the bottom line through lower taxes.
Okay, that's some view coming in on India. I just want to highlight a few stocks. Pull up Linde India. That's had a good run in the last 5 to 10 minutes of trade. It's up as much as 12% right now. Of course, it's cooled off from the higher levels as well. And Parag Milk is up about 15%. Now, this particular counter touched 52-week low. And there was some exchange announcement which came in the morning stating one of the promoter entity bought nearly 2 lakh shares last week, maybe on back of that news. The stock's recovered from those 52-week levels and is up about 15% in trade. Couple of other stocks which are doing well. Want to highlight Century Textiles, which is also your F&O stock, has gained about 7%. And you've got stocks like your power financiers, PFC as well as REC. Both of them have gained between 5 to 6% today. Hemant, any trade on PFC or REC considering the sort of moves that we've seen today?
PFC is, I think, quoting above 115 after 4 or 5 months, Navneet. So, frankly speaking, that's a positive. So, if I were to go long, I would probably go long with a stop loss of 115. And if I were to look at something slightly different, I think power grid Navneet is down for 5 weeks in a row. We haven't broken the previous week's, or not almost broken the previous week's bottom. I think that would be a slightly riskier but safer trade simply because the stop loss is closer now.
Okay, that's power grid for you. Ajit, any trade on BPCL at current levels?
So, yes, Navneet, today we saw an uptick with the gap and still holding that gap. It looks strong on charts after that reasonable. We've hardly retraced from the record high, so it's indeed a positive sign. So I guess the time-wise correction is over in this stock. So one can definitely think about going long with 518 as stop loss and clear around, let's say, 535 to 540 as a target area.
Okay, that's BPCL for you, 524 on the stock price. Another one is Edelweiss. Ajit, what's your sense on Edelweiss? Ajit?
Okay, so Devina, Edelweiss, we have seen strong surge, like the other financials also, we have seen a very strong surge. So after this move, I feel that consolidation is more likely. So in case if somebody having any long position, they should book profit and wait for any dip, let's say close at around 120 to 115 zone to re-enter. But overall, yes, it looks strong. So, but considering the kind of move that we have seen, it's advisable to book profits.
Okay, that's Edelweiss for you. The stock's at 129, had crossed 132 in last week's trade, but stock's been doing really well. In the last 1 month itself, I think it's been about 45% gains that we've seen in the counter. But it's also time to find out what has made it to Sharad Dubey's list of App4 stocks this afternoon. Sharad, good afternoon.
Good afternoon, Devina. The first stock I've picked up is Parag Milk Foods. The stock is up almost 14% after an exchange notification came where the promoters have acquired 2 lakh more shares. That's almost 0.24% equity stake. So the equity stake rises from almost 45.96% to 46.2% in the company. Up next, we are having HIL, which is up almost 5.7% after the company stated that it has commenced the production of its 2 PVC lines as well as SDWR pipes in its Telangana plant. So the company is actually venturing into the plumbing solutions and they're actually expanding their portfolio. And the next stock is HCL Info. It's almost 19.6% stuck in an upper circuit after the company stated that it has completed the sale of its Singapore arm to PCCW for almost 47.6 million Singapore dollars. And the last stock of the day is Power Finance Corporation, which is up almost 6.3% after fresh longs were seen of almost 11%, and the volumes are trading at almost 3 times its 20-day average. Back to you.
Okay, thanks a lot for that. Some single-digit stocks out there as well, the likes of HCL Info, etc. But largely a set of names which have bounced back and bounced back quite smartly from the lows that they have seen. Okay, let's get in one more fundamental voice. Sanjeev Bhasin of IIFL Securities with us on the show. Always good having him. Very bullish on the markets currently. Sanjeev, your stance on the market now well established. I want to talk about a few pockets wherein there are reasons maybe to have a view. Let's start off with the finance minister's comments on the divestment and what she said about March being the deadline by which you will probably hear about the divestment proceedings of at least BPCL and one more other company. But BPCL in particular has gotten excited as a result of that. Now my question is, would you go out and make an investment case into Bharat Petroleum after the run-up that we've already seen here, or would you opt to maybe take a look at IOC or maybe even an HPCL?
Yeah, good afternoon, Neeraj. So, firstly, as a disclosure, we own all three in our portfolio, and we are not trying to time one from the other. The underlying theme remains that we want to be invested in PSU stocks. That includes the OMCs, the gas utilities, and a basket of PSU banks also. So, the CPSE ETF would be our best conduit to be bought. We think that for the investors will make a lot of money. On the divestment, we are very, very optimistic, and the government has set a timeline, and they are putting their money where their mouth is. The adage for the government is the government has no business to be in business, which is the first time we've seen such a proactive, move towards a strategic disinvestment of a lot of the PSUs. They've named three, but they've also given you the hint of BHEL. They've given you the hint of some of the others. IOC, where the stake will come down to 25-26%. So all in all, it's a very, very good move. The 3-4 months is just a matter of time before we can say, see the next few months. You'll be seeing a lot of positive action over there. So for us, all three are a buy on declines because we want to participate in the PSUs becoming huge outperformers in at least the next 18 months.
Okay. So you'd buy them, but buy them on declines, not necessarily at the current prices. Sanjeev, what we've seen is the kind of reaction that the market is giving to any kind of earnings surprises on the pharma side. One positive surprise that we've seen in Glenmark, and that stock has done really well. A couple of others too. If I were to ask you for not a basket of names, but that one name which stands out as an investment in pharma, since you at times play contrarian, where is it that you're playing contrarian here in this pocket?
Well, actually, you should be asking some of the bears what has happened in Glenmark Pharma. Just as in, a 275 idea is up to 4.6. So it tells you extreme pessimism, and I think pharma can be the dark horse of 2020. My stock would be Lupin, but we are playing three stocks as a whole as a basket: Sun, Lupin, and Dr. Reddy. We are very comfortable with those. But like I said, there is so much of underpinning on pharma with everyone, on the same FDA concerns which are getting alighted, and we are seeing generic pricing back. I think Glenmark has truly set the, cat amongst the pigeons. So all pharma stocks as such should be very, very big outperformers, but you have to be credible in what you are buying. So Lupin would be my dark horse, which can hugely outperform in 2020.
Okay, since you mentioned it, Sanjeev, let's talk about the telecom space and let's talk about Bharti and Vodafone.
Well, numbers tell you all. So the pessimists and the optimists will be divided. All declines in Bharti are buying opportunity. A stock which is hitting new highs is telling you where the action is. So as a trader, you should be long on Bharti. You should have been long on Bharti from 320 levels. We are overweight on Jio and Bharti. We think that's the best business to be in because aside from the rhetoric which goes on, we think the government will definitely give both Vodafone and Bharti more time for payment of the AGR dues. There will be speculation on both sides, hence the stock movement. But we think ARPUs have bottomed out, and we think price rises on data are going to be, seeing a huge uptick in the coming months and coming quarters. So on the bottom lines, we think Jio and Bharti will definitely benefit from them. But as a disclosure, Bharti was our top pick, closer to 300 and below. At this price, we are actually seeing a lot of uptick, and we would rather book profit or stay invested rather than advise fresh entry over here.
Okay, that's on Bharti, which is now at about 407. What happens to the PSU banks now post the SR Steel judgment, Sanjeev, and particularly SBI?
Well, a univocal buy, and you got to put your money where your mouth is. Don't wait for any declines in SBI. SBI has caught everyone on the wrong side. When I remember close before Diwali, it was one of my top picks at 255 when everyone was talking of extremely weak results. In fact, Mr. Rajneesh Kumar would arguably be one of the best SBI chairmen I have been, very, very grounded, and he gives you the exact view, and he's told you that 2020 March may be the best numbers which you will see from State Bank and beyond. So for us, State Bank, Bank of Baroda, Canara Bank, PNB, this basket would do extremely well. You could add an Indian bank over there. But don't play that for a quarter to quarter. I think the next 2 years belongs to PSUs given the recapitalization, given the return of capital through the IBC, which now seems almost 1.5 lakh crores will be settled in the next 3 to 4 months, and where again they are going to get a lion's share of the retail market, given that NBFCs are still grappling with the cost of money.
Okay. Well, that's, as I said, Sanjeev's stance is now well established. He is bullish and he is wanting to go out and try and buy some beaten down names and some stocks which are anyways doing well for themselves. Speaking of stocks which are doing well for themselves, a couple of pockets which have done reasonably okay for themselves today. Century Textiles comes up in the realms of that conversation, Hemant, simply because of both the price and the volume action here. Do you like the chart?
Yeah, chart looks interesting. We spent almost 6 months moving sideways. The bigger breakout, Neeraj, hasn't happened. The bigger breakout is between 350 and 470. We've been here 1, 2, 3, 4, 5, 6, 7th month between 350, 470. But yeah, the short-term bias has obviously turned positive. You have a volume spike up. The indicators have given a crossover buy. 430 was resistance. We're quoting comfortably above that. It looks good. It looks promising, and I think it could also mean a monthly breakout sometime down the line. But 382, 450 in 3 days, I'd wait for a cool off to 430. But if there is a position hold, I think it has the capacity to surprise over 470 big time.
Something that's inched up in the last few minutes, Hemant, is VRL Logistics. Sorry, you saw something else as well?
No.
Okay, VRL Logistics.
We've been moving sideways, but the level to watch out for is 276. We're at 270 right now. Volume has spiked. We haven't done much for a long time, but I believe, as Devina said, there's a lull before the storm. So I believe the storm should start unraveling about 276. Looks promising. Breakout hasn't happened, but it's making all the right noises daily, weekly, and even monthly. So it looks good for a jump.
Okay, that's VRL Logistics for you. Remember Balkrishna Industries, which reacted positively last Friday to its numbers. It's cooled off a bit. The stock's down about 2%, trading around the levels of 848. Ajit, would you use this as an opportunity to create fresh longs in Balkrishna Industries?
Yeah, certainly, Navneet, because after this dip, the stock is currently resting closer to its 200 days EMA, which is indeed a positive sign. It's holding above the same for the last almost a week or two. So it's formed a fresh buying pivot. The risk reward is also favorable. So considering the overall trend, 820 should be a stop loss, and clear around, let's say, 900 to 925 is what we are eyeing.
Okay, that's Balkrishna Industries for you. Probably technically you can use these levels to create long position. Sanjeev, want to chat about Cholamandalam investment. The stocks had a good run in the last few days. In fact, it's been trading at its 52-week high. The numbers for the September quarter were also healthy. Within this NBFC space, would you be a buyer here, or there are some other favorites?
Yeah, so we have a buy on all 5 of those stocks, Cholamandalam included. We are very, very bullish on M&M Finance, L&T Finance, and LIC Housing on the mortgage fund, aside from Bajaj Finance and HDFC, which will be a core of the portfolio, but we are not enlarging commitment. In fact, we think these two could, at least Bajaj Finance could see some selling. But the others have come out with decent numbers, and we know their transit, the parents behind are infusing capital. So Cholamandalam, M&M Finance, L&T Finance, all these, and LIC Housing, I think these are going to give you extremely good delta in the next 6 to 9 months. These are quality names you should own, and we think this mistrust is slowly but surely getting allayed. LIC raised a fixed deposit at 7.5, the lowest we've seen in a long time, and I think yields are going to definitely benefit them on the upside. Business is coming back, and we think this festive season onwards, you should see the return of consumption in a big way in November, December, given the marriage season and so on.
Let's talk about the metals pack too, Sanjeev, and what's your thought out there with regards to the biggies like Tata Steel, JSW Steel? What happens here on once we have the entry of ArcelorMittal?
Well, you had the opportunity of of the year when 2 months back the worst stocks, worst sectors, that is auto and metals, were grasping at 52-week lows. 5,500 on Maruti went to 7,700, 16,000 on Eicher went to 23,000, and 325 on Tata Steel is now 400 plus. Similar is the case with Hindalco and JSW. So extremely bullish on 4 names: Hindalco, JSW, Tata Steel and Hindustan Zinc. And I am proxy to the point that this interim deal is a given over here on the US-China side, which means commodities, according to me, from January 2020 could be the sector to watch out for. Given that the underpinnings are priced in, EBITDA per ton on steel prices may be the lowest, and we think now with all the industries, particularly auto and infrastructure, showing an uptick, these could be the surprise outperformers in 2020. So those 4 names stand out. For Hindustan Zinc, I thought the numbers were reasonable, dividend yield, and also talk of the 23% stake of government getting sold will again unleash a huge potential for 20% upside at least in Hindustan Zinc.
Okay. Stay on with us, gentlemen. Lots more to talk about. But let's also take a check on what's been happening with regards to the conversations in the dealing rooms this afternoon and what they're recommending. Darshan Mehta is joining in with his channel checks. Darshan, what are you hearing?
Yeah, a couple of stocks, not too many, but Cholamandalam Finance is something that's been spoken about. No doubt came out with a very strong set of numbers. Some of the HNIs are buying this very close to its 52-week high. Did manage to hit it on Friday post the numbers, but nevertheless decent volumes today. Almost 2.5 million shares have been traded. So there is traction on the positive side for Cholamandalam Finance. The other one is Tata Steel, which is up almost 3.5%. Now China has cut the short-term funding rate, and that is something that is going well for the domestic economy, and there is traction in the metal space. The Nifty Metal Index is one of the top gainers. One of the top performers is Tata Steel, and that is something that dealers indicate could be more positive for Tata Steel. And finally, Nalco is the other one in which dealers indicate that at lower levels some of the HNIs are actively accumulating the counter. Some of the smaller boutique brokerages houses are also telling their clients to accumulate. Debt-free company, cash-free company, very high volumes, almost 5.5 million shares have already been traded. So Nalco, something on the back of the metal rally, is something that's been spoken about.
Okay, thanks a lot for that, Darshan. We'll watch out. Doesn't usually come up in conversations, Nalco, off late, but even since dealing rooms are talking about it, I wonder what your view is on Nalco.
It's a sell on bounce. I think 47.50, 41. So we're seeing a retracement, a recovery. A bearish gap on Thursday, Neeraj, is what the stock is trying to cover up. So we're at 42.35. 1.5 to rupees seems very much possible. So 43.5, 44. Closer to 44, 44.25 is when I think it would be a short. So from a very shorter term point of view, it's probably a buy, but rather than a buy, I'd wait for it to come to 43.5, 44 to sell it.
Okay, so maybe, I mean, Hemant doesn't want to go out and buy this one. He may want to sell it at a later point of time, but he does expect that maybe, just maybe, there could be a bit of a pull up there. What is also doing well, by the way, we already spoke about Ipca Labs, but just keep that in mind that from among stocks which are trading close to 52-week highs, this one is right up there and trading close to its life highs, or in fact at life highs for Ipca Labs. You don't normally associate a pharma company with doing that, but it is doing that. The other one which is doing very well is Dish TV. Now, this is the difficult one, isn't it, Sanjeev? What do you do with a Z and a Dish?
So Neeraj, for us, those are avoid. We've rather upped our ante on Sun TV. We think the management guidance of weak numbers on ad is getting priced in, and they've indicated that their market share on the Tamil channel has gone up. Their OTT should start to give cash accretion from the first quarter of 2021, and we think Sun is actually going to gear up to make more money with ad revenues coming back very, very strongly in 2020. We've used this decline to buy. This 480 to 485 is an extremely good point. We'd rather play Sun through the media route unless we get some more color on Z, on what the stake sale is, who is the buyer over there. Till that time, Z is an avoid for us. Sun is something which we can definitely see giving a 25% upside by next Diwali.
Okay. So Sun TV is the pick within the media pack, and avoid something like Dish as well as Z's. The call coming in from Sanjeev Bhasin. Pull up UPL. That stock's up today and it snapped the 6-day losing streak. What do you make on the charts? After the stock was weak in the last few days, we've seen some bit of recovery in today's trade.
Frankly speaking, Navneet, it was oversold, and it was actually looking set for a bounce of sorts. And well, it finally happened. We were down Navneet 100 points. So the bounce should take it to probably around 565, 570 also before it loses steam. So okay, 3.5% move is pretty sharp, but I still believe there is some headroom left. But having said that, the bigger picture is coming under pressure, Navneet. If we close at this level at the end of the month, I know that's 2 weeks away, it would quantify the downward bar reversal. So the bigger picture is getting spoiled, but short term, a bounce is underway and is still going to remain for a few days more.
Okay, that's UPL for you, which is up and about in today's session. Just 10 minutes to go for markets to shut shop, so let's get you some closing strategies. Ajit, any STBT or any BTST for tomorrow's session?
So, Navneet, metal counter, as we were discussing, that are witnessing some buying traction. So, Tata Steel can be considered for fresh buying at current levels. So, 602 should be a stop loss for the fresh long, and close around 420 to 425. That should be a target area.
Your closing strategy would be?
Closing strategy would be a BTST on Axis Bank, Navneet, because I believe Axis Bank should bounce. BTST on Axis Bank.
Okay, I just want to actually get your view on Avanti Feeds also. We are seeing profit taking. Friday was down. Yes, today again it's down another 6%. But in the last 3 months, the stock's been up about 68%. So do you see more profit taking here?
Yes, I think so. 1 is going to remain choppy. 2, we're slipping into a correction. 3, the move from 350 to 570 is being retraced. So it's going to bounce around like a ping pong ball, 470, 570. But yes, with ups and downs, we are going towards 470 again, Devi, now over a period of, it's not a near-term call, probably a 2-3 week call. And yes, more importantly, like you said, we're slipping into a correction, more profit booking expected.
Sanjeev, what do you make out of the shrimp feeds business and the players thereof? Waterpace, Avanti Feeds, Apex Frozen Foods?
Well, they've done extremely well, and it tells you that mid-caps is where the action is. In fact, I can stick my neck out. I think 2020 belongs to mid-caps. So choose your winners, be convinced in what you have. You've seen enough decimation. These stocks can actually give you huge delta, not to joke, but 2-3 times is what we are looking at. You just spoke about, I won't talk about Avanti Feeds because I'm not covering that, but I'm speaking of something you just mentioned, UPL. I think agrochemicals will see a huge rebound, and my top pick on Diwali was Rallies India at 148 to 150. Stock hit a new recent high of 183. That stock is raring to go to 225. Its parent company is Tata Chemicals, and we think the merger of the business of consumption on one side and the others will see a lot of value unlocking of Rallies India. Their exports, their global trades are doing extremely well. So for me, that would be a very, very standout player. It's as a disclosure that has been under our coverage from that 148, 150. We have a target of 225 on Rallies India.
Okay, so Rallies India is the top pick in the broader market. Sanjeev Bhasin, thank you so much for joining us and taking us through your thoughts on the markets. Pull up D-Mart. The stock's taking support today at its 50-day moving average. And in the last 6 sessions, we've seen correction of nearly 7% for Avenue Supermarts. What do you do here? Would you use these dips to buy more at lower levels, or it's headed lower?
Buy more at lower levels, but it's headed lower. So 1700 would be the level to buy, Navneet. Currently, we are very strong support at 1800. We might take support tomorrow, bounce back maybe, but I think 1700 is the level. So currently, we are slipping into correction. But yeah, I don't have too much of data, but whatever data we have clearly seems to suggest we remain in a medium, and I can't see a long term because I don't have enough data, but intermediate uptrend, yes.
Well, that's a few names. Today, in amongst the banking names, I think Axis Bank has done well. So HDFC and the others have fallen by the wayside today. But Axis Bank has picked up some steam, so that's actually good news. Do watch out for that one. Up about 1%, a bit of a late uptick out here. Just wondering if you buy this weakness, Ajit? Buy this strength in Axis?
Yeah, certainly, Neeraj. So you've rightly mentioned that after this up move in ICICI, Kotak, and SDFC, we are now seeing that Axis is showing some strength. So and that too after consolidating for a decent period of time. So I definitely feel this is the best time in case if you wish to initiate any fresh long position private banking name. And after that, especially the kind of up move that we have seen in ICICI and the others. So definitely it's a buy at current levels, and closer to around 715, one should maintain a stop loss.
Okay. The other one which is doing very well is Credit Access Grameen, and that stock is inched up another 2 or 3%, 2.5% to be precise, and is trading at live highs for itself, 793 and counting. So do watch out for Credit Access Grameen in the session today. But let's maybe try and take a call as we start wrapping up the markets on the top performing stock today, and that is Tata Steel. 412 Heyman for somebody who initiated longs. Carry home the long positions?
I think so, because we're breaking out of this 390-410 range, Neeraj. So yes, so we are moving towards 420 and more. So yes, clear hold.
Ajay, would you recommend carrying home long positions in Glenmark or book profits at current levels?
So, Navneet, after this rise, 375 is the area where I see this stock taking a pause. So, in case somebody is managed to, buy at lower levels, say let's say 300 plus zone also, the return is decent. So, considering that, I would recommend to book profit and wait for the stock to, consolidate a bit. And in case if it manages to cross 375, then you can re-enter. But current levels, one should book profits.
Okay, Jeman, stay on. We'll take in closing thoughts from you in moments from now, the finishing thoughts from you. But let's start wrapping up the markets, and let's tell you what the markets have done today. Well, the screen shows you precious little. There is hardly any movement that we've seen on the benchmark indices today. The mid caps and the small caps as well have struggled to show some meaningful uptick. At least the small caps have. So the mid cap uptick, about 0.77%, is pretty heartening. Let's wait and watch if it reflects in the overall market breadth for the markets. But I'll take you to the large caps and what they have done in the session today. The index action may have been flat. There have been individual stocks which have moved quite a bit. So at least on the gainers side, some lightweights include a Tata Steel, UPL, Hindalco, all of which are moving over a 3.5%. BPCL has some gains. So does Z Entertainment, and there's some strength in JSW Steel. So commodity stocks have looked very, very strong in the session today. What's not looked good? I mean, aside of Yes Bank, which is down 4.5%, Bajaj Auto down about a couple of percentage points. There is weakness in Hero MotoCorp. So two-wheelers by and large have looked weak. Nestle is down about 1%, and HDFC Bank, the principal culprit on the index, putting pressure, down about 1.14%. It's off the lows of the day, but still in the red. The broader end of the spectrum around it, heartening performance by the mid-cap index at least.
That's right, Neeraj. And there were a lot of outperformers also when you look at the individual stocks. And let me begin with Glenmark, a counter which was up for the third straight session. And that was on back of improved results that we saw for the September quarter, both from US as well as the domestic market performance was good. 21% higher, at least long positions were seen on the future side. And from the pharma pack, you also had Wockhardt Pharma, which gained about 10%, of course, on some reports stating that the company is looking to sell non-core assets to retire its debt. Parag Milk was the other stock after the exchange notification that the promoters have bought 2 lakh shares from the open market last week. The stock touched 52-week low, and from those lower levels, you did see buying coming about. Corporation Bank was locked in upper circuit today. That gained another 20% today. And you also had something like Linde India. The counter gained, I guess, in the second half of the trading session, and it's closing with gains of 11%. F&O over-the-counter counter, Century Textiles witnessed long positions today. Good going for this stock. It's also trading very close to its 52-week high. And power financiers were in focus, and something like PFC, which went up in trades. Some buying interest definitely seen here, 6% higher. On the losing side, two stocks which were locked in lower circuit. One of them was Prime Focus, which was down about nearly 20% in trade. Some selling seen right from the word go in the morning. And second straight day of lower circuit for Sterling and Wilson, despite there's some clarification coming from the management, but no respite for the stock price. Profit booking seen in GICRE. The stock was down about 4%. Apex Frozen Food also witnessed profit booking, and Jubilant Food Works didn't have a great session. That stock was down nearly 2% in trade.
All right, I think we're just still a minute away from market closing, but that's not going to have any material impact to the rates that we're already seeing on the index. So that's going to be a sub 11,900 kind of a marker for the Nifty 50, which is absolutely flat this Monday afternoon. Remember, we're coming on the back of a truncated week. Last week was subdued, and like him and most of the other technical experts that have been talking about, till we're above that 11,800 mark, we're still in a structurally strong position and possibly can use dips to buy into. But for the Nifty Bank as well, the support needs to come in if we need to see the index break above the 12,000 marker. So about 8 odd points higher this afternoon, coming right down to the individual movers and the contributors. I don't think even the point contributors would change much, so we'll just quickly have that on board as well as it's sticking right now. Bharti Airtel contributing about 8.5 odd points, HDFC another 6 points, followed by Infosys. What's losing out, and the big chunk of it is coming in from these heavyweights here, all these three there, RIL, HDFC Bank, L&T, TCS.
And it's largely profit booking for these stocks as well, because they contributed to the gains that we've seen in the past. But talking about the overall markets, though, your mid-cap and small-cap indices could have shown you some gains today. But if you look at the market breadth, I guess it was just about even. Steven, these are your final closing rates. Nifty closing below the mark of 11,900, Sensex down about 34 points in trade. Clearly, it was a lackluster session, but slight bit of outperformance continues from the Nifty banking space. And this is what I was talking about. The market breadth for the entire listed universe is still not looking that great. It was marginally in favor of the declines. And
just a quick look at the participation as well while we've gone through this, to take a look at the turnover, and then India Wix, we've been talking about how that came off, and then today's session it moved back up. NSE cash about 33,500 odd crores, while on the F&O side slightly lower than average that we've been seeing, but 7.5 lakh odd crores.
Yeah, cash participation has definitely gone lower, and Wix rose, I think, day one of the new week, especially on the day when markets were flat. India Wix closing with gains of about 4%.
All right, that's the closing for the day, lackluster to say the least, but let's quickly get in some closing ideas and thoughts from our technical experts. Ajit, let me come to you first. What do we watch out for come tomorrow?
As we discussed in the beginning, that the Bank Nifty we feel has a potential to push the Nifty higher and let it retest closer to 12,000, 12,001 marks. So we believe that private banking space, name like Axis, Kotak still have potential to do well. So 31,600 is what we are eyeing, and the kind of closing that we have witnessed in Bank Nifty, it looks promising. So considering that, one should definitely continue with the positive bias. And apart from banking, we feel that auto and metal can also contribute to the rally from here onwards. So it's a buy and dip market. Continue with the position, but on the stock specific front, do maintain few shorts considering that we are still in a range.
I think it's better to be specific because market doesn't seem to be going anywhere. But I think I also agree with Ajit that Bank Nifty can surprise, especially about 31,200. So I'd be cautiously optimistic, but I think individually you have Tata Steel, you have Infosys, you have Axis Bank, you have Tata Chemical, so many stocks which promise a lot. So would be stock bullish, Nifty neutral, Bank Nifty positive.
Okay. Thanks a lot for that, Hemant. And Ajit, thank you very much to both of you for joining in this afternoon. And on that note, it's a wrap out from Navneet, Neeraj, myself, and the entire team that's put the show together. Thanks a lot for watching, and we'll see you tomorrow.
Namaskar.